What's going on, top producers? Alexander Fazalani here, and today we're going to discuss how the rise in inflation and the slowdown in economic growth is going to affect you as a real estate agent and how it's going to affect your clients and the whole overall real estate market. But before we do that, I'm gonna need you to hit that like button, that subscribe button, and also hit that little thing that looks like a bell so we can continuously bring this content to you for free 99. And as always, it's brought to you by Design for Agents, and e-commerce geared to making sure you have what you need in your real estate business. You can check that out in the description below. So as you know, the Fed is in a little bit of a conundrum. You know, they're in a pickle right now because on one hand, we have rising inflation, and on the other hand, we have a slowing down economy. So the Fed is looking at inflation and they're like, we have to battle this immediately. However, because prices of everything are going up so rapidly, people are spending less money, right? So if interest rates go up, people are going to spend less money. So that means the economy is going to slow down, which means there's going to be less progression. And that's also another problem that we're going to have. So that's not something that the Fed wants to happen. And obviously in times of war, we want a booming economy in order to help fund us in order to battle this war or potentially deal with World War III. If inflation is going up, right, that means in order to battle that, we're gonna have to raise interest rates jumping from 2.7 to in the mid 4s, which is still historically low, right? But it's continuously rising, and they want to raise it, anywhere from 3 to 6 times this year alone in order to help battle inflation. But what happens when you do that? That actually slows down the economy because less people are going out there borrowing money in order to, afford houses, buy cars, and things of that nature, right? So now we're kind of like in this weird situation because now the economic growth has slowed down and inflation is still going up. So we're kind of in this weird middle ground. And then on top of that, we added war in the mix. The United States has put sanctions on Russia. So what that means is when you're putting sanctions on Russia, we're saying, hey, you cannot use the US dollar. We're pulling out all our businesses. So that's going to hurt your economy because we are the reserve currency of the world. Now, what Russia is saying is, we don't care, your dollar is worth nothing to us and we can survive without that. And then on top of that, China is looking over at Russia like, hey, we're holding a lot of, debt from America and they're sanctioning you. So what can they do to us if we decide to do something that they don't like and they try to sanction us? So now Russia and China are kind of taking a step back from the US dollar and possibly trying to, distance themselves from the US dollar, which is a video for another day. So with the sanctions on Russia, Russia is not providing us oil, and 40% of our oil reserve is coming from Russia itself, right? So that means energy is going to go up in price, which means transferring stuff from the farm to the grocery store is going to go up in price as well. Hence why my public bag costs about $200. Just throw it in the bag. So how is this going to affect us as real estate agents? So if we see the interest rates rise, what's going to happen is that people are less likely going to be able to afford homes. Because if you think about it, if you bought a home at 3%, which most people did during that time, they got cheap money, so everyone was out there buying up houses, so we were in a seller's market. So what happens is if interest rates rise, they're paying, let's say at 3%, they're paying like $1,600. If it goes to 5% or 6% or 8% or whatever it may be, now you're paying $2,900, a lot of people might not be able to afford that. So that means we're going to see a shrinking pool of people going out there and buying houses. So how is that going to affect the market? Right now, we're in a majority seller's market. A majority of areas are selling like hotcakes. The market is moving, and it's moving dramatically high on the seller side. I think we're kind of hitting this pinnacle moment where we're about to switch and make a shift into the buyer's market, right? Because as soon as interest rates, jump up to 5%, 6%, 7%, 8%, we're going to see a slowdown in people actually buying, which means we're going to see a lot more inventory and not a lot of people buying that inventory. So investors are going to probably stop a little bit, building out houses and so on and so forth because everything is so expensive and the prices are going to continuously rise, but people aren't going to be able to afford those prices. So the market is going to start getting stagnant. So once we see this stagnant market, this is where we're going to see the great exodus of real estate agents. So a lot of agents are going to be like, hey, nothing's happening, nobody's buying, nobody's selling, I'm out. Right? So we're going to see this mass exodus of agents leaving the market, and the top producing agents are going to find a way to deal with this market, right? So they're either going to get into the short sale market. They're going to get into the foreclosure market in order to kind of stay afloat and maintain their business, right? So we're going to see the stagnant market because not everybody can afford as interest rates go up. And then we're going to shift into a buyer's market where there's a lot of inventory. So buyers have the pick of the litter when it comes to the prices and the houses that they want, right? So we're going to potentially see a downturn in prices in the future. And again, guys, this is only my opinion based on my experience in the real estate industry and what I see potentially going wrong in regards to economics right now. So it's all up to the Fed and what the Fed is going to do. If they continuously print money, we're going to be screwed because inflation is going to go up. And if they raise interest rates too fast, we're going to be screwed because the economic growth is going to go down, which means, you know, the market's going to be all types of fucked up. So what do you guys think in regards to what's going on in the real estate market? How do you think the rise in interest rates is going to affect the real estate market? Let us know in the comments below. And again, guys, this is just my sole opinion. I'm very open to communicating with you guys. You can always reach out to me on Instagram, DM me. I'm more than happy to kind of shoot the shit with you and get to know your point of view as well. And again, this is brought to you by Design for Agents, an e-commerce geared to making sure you have what you need in order to hit the pinnacle of your real estate career, whether it be marketing, branding, or take your business to the next level. You can check that out in the description below, and I will see you guys. Be safe and make sure you're advising your clients right. Try not to push them at the top of their budget, because if they lock in money and they're unhappy with paying the price of their monthly, guess what? The price of eggs is only going up as well. So I'll see you guys in the next video.